A ton of investors are chasing the quantum dream, the futuristic machines, the mind-bending physics, the stocks that promise to deliver life-changing gains. But here's what almost no one's telling you. Right now, almost all the pure-play quantum darlings are actually burning cash thanks to extraordinary losses, and likely years away from ever making a dime. So I went digging for the real quantum money, the companies quietly laying the tracks before the train arrives. I found 3. They're profitable, they're growing, and all much more sensible investments than the typical quantum stocks you hear about. So if you like the sound of this, then please hit the like button so I know to make more videos like this in the future. By the way, I'm Steve Reitmeister. I've been investing for over 40 years. I spent nearly 2 decades as the editor-in-chief at Zacks.com, and now I'm a partner at WallStreetZen, where I helped develop the Zen Ratings quantum model to help streamline and simplify stock research for everyday investors like yourself. Before I dig in, a quick reminder, I'm not a financial advisor, so please do your own research before buying or selling any stocks. Now, let me give you a little background on why quantum computing is so compelling right now. McKinsey projects that the broader quantum technology market hits $97 billion by 2035 and then doubles to nearly $200 billion by 2040. This very much explains why the U.S. government just committed $2 billion in direct investment to quantum computing companies. That's because they see this as one of the next frontiers and want the U.S. to lead the way over China. Now, I'm only scratching the surface of the story here, but if you like discussing macro subs like this, you should consider joining me during my weekly live training session. That's every Monday at 7 p.m. Eastern Time. It's free, and I go into a lot more detail about my market outlook and my favorite stocks. Just scan the QR code on your screen to register right now. All right, back to the quantum story. The key point here is that quantum excitement is real. The problem for investors is that many of the pure play companies in the space appear to lack fundamental substance, as in they are highly speculative and thus very risky investments. When you run the pure play quantum names through the Zen rating system, which reviews each stock on 115 unique factors that help detect the highest likelihood of outperformance, most of them come back with the lowest rating of F, which equates to a strong sell recommendation. That means you need to dig a little bit deeper to find the rare few quantum names with real fundamental merit, which improves their investment outlook. The 3 stocks I'm showing you today are all proven, profitable businesses with solid fundamentals, and they all have a real connection to the quantum computing revolution. They're sort of like getting a front row seat to the quantum show without betting on science fiction projects that may never pay off for years, if ever. Let's kick off our list with stock number 1 in Microchip technology with a symbol of MCHP. Quantum computers are advancing fast enough that the U.S. National Security Agency has already issued a mandate. Every data center, defense system, and telecom network must transition to quantum-resistant encryption within the next 2 years. That deadline is creating an enormous government-backed opportunity, and Microchip is already shipping the hardware that solves it right now. Microchip makes the embedded controllers and security chips that sit inside data centers, defense systems, and yes, the telecom infrastructure. The company is projecting 65% revenue growth in data center solutions unit in 2026, targeting approximately $500 million from that segment alone. They also just launched a new family of post-quantum cryptography-ready Trust Shield controllers, specifically to meet the NSA's 2-year mandate. Now, these chips are shipping now. This isn't a maybe. It's a government deadline with a product already on the market. Wall Street has taken notice with a strong buy consensus. As of the week I'm recording, some fair value targets suggest nearly 50% upside potential in the coming year. This includes some recent upgrades from highly rated analysts like Matthew Prisco of Cantor Fitzgerald and Harlan Sur of JP Morgan. They both rank in the top 1% of all analysts based on real stock picking track record. Now, or to put it another way, it pays to listen to them given their tremendous stock picking over the years. The Zen Ratings model also smiles upon this stock, rating Microchip a B, which amounts to a buy recommendation. But it's really more like a B plus because it ranks in the top 7% of stocks we track, and the threshold for the coveted A rating is the top 5%. So just a smidge outside that margin, but still quite impressive. Each overall Zen rating is built on 7 component grades. So let's take a look at those to further decide the strengths inside this company. Now, it earns a B for momentum, ranking the top 17% of stocks we track in this area, but the standout grade is for growth, where they enjoy an A rating thanks to being in the top 2% of all stocks in this vital category. The one risk worth naming here is that insiders have been net sellers of the past year. This makes a lot of sense for a stock experiencing strong momentum as execs want to lock in some of those gains. The bullish thesis is straightforward. that being a semiconductor company enjoying excess demand thanks to a government-mandated upgrade cycle. Microchip may not be flashy, but has the fundamental profile and macro setup for more upside ahead. Before I move on to the second stock, just a quick reminder that if you like timely stock picks and want even more, then please subscribe and hit the notification bell. That's because I release videos like this several times per week, and this is the best way to ensure you see the next one. Now we're going to move on to our next quantum pick in Entegris with a symbol of ENTG. Here's something most investors don't think about when they picture a quantum computer. Before a single qubit can be tested, someone has to build the specialty chip the computer actually runs on. And quantum chips demand a level of material purity that makes even today's most advanced AI semiconductors look rudimentary in nature. A single microscopic contaminant can collapse the entire quantum state. That's where Entegris comes in, and why the company sits at the foundation of every serious quantum computing roadmap on the planet. Entegris makes the specialty chemicals, filtration system, and advanced materials that keep semiconductor fabs running at the atomic level of precision. Every new AI-driven process node raises the penalty for contamination and pushes fabs towards tighter purity control. Entegris sits directly in the center of all that demand. I should also mention that the same materials experience that serves AI chip fabs today is exactly what quantum chip fabrication will require at even higher standards. This helps explain why their advanced logic business line has grown to 40% of total company revenue, with management pointing to even more growth ahead. With all this growth at play, it's no surprise that Wall Street analyst community widely recommends Entegris as a buy, with the average price target pointing to over 50% upside potential from current levels. John Roberts of Mizuho is quite bullish on Entegris. This is good to note, as John is ranked in the top 7% of all analysts for his stock picking recommendations. He calls Entegris one of the best positioned materials names in the extended fab upcycle, praising its asset-like consumables model that has the power to turn every incremental tool installed into recurring high-margin business. Now, the Zen Ratings also is digging this stock, which earns a B rating, making it a firm buy recommendation. Looking at the component grades, there is much to like here, as we're talking about a stock scoring the top 15% for growth, top 15% for momentum as well. But interestingly, the best attribute is the top 7% showing for safety. Growth and safety rarely go hand in hand, especially not in the quantum computing space. This makes Entegris uniquely attractive as an investment. But there are real risks. For one, Entegris is still working down significant debt load from a 2022 acquisition. And second, the business is very sensitive to fab utilization rates, meaning if semiconductor spending slows or customers work through inventory, then Entegris could feel that pain in earnings and the share price. But listen, Entegris is the company that makes sure quantum chips can actually be built. It doesn't need quantum computing to fully mature tomorrow to be a winning investment. That's because every AI chip being fabbed today is already its customer. The quantum tailwind is just another promising catalyst. We are making our way to the most exciting of the three stocks today, but first up, a quick reminder that you want more analysis like this, then please join me on Monday at 7 p.m. Eastern Time for a live training session. I don't just share what I'm buying, but how I'm finding it so you can do the same. I also walk through my trade of the week, which is only shared with live attendees. So if you want to learn the framework I've used for 40 years to find winning stocks, it's free this Monday at 7 p.m. Eastern Time. Just register at WallStreetZen.com/live or follow the link in the description below or scan the QR code on your screen. Whatever it takes, I look forward to seeing you there on Monday. Let's close out the list with our third and final and probably best stock in Science Applications International with the symbol of SAIC. As I referenced earlier, the U.S. government just pledged $2 billion in quantum computing companies. They also designated quantum as one of 6 critical defense technologies in the 2026 National Defense Authorization Act. That money just doesn't go to quantum hardware startups. Somebody has to integrate all of it into the most complex, most secure IT infrastructure on the planet. That somebody is Science Applications. This company is the U.S. government's primary technology integrator. Now, defense, intelligence, space, civilian agencies, they all rely upon Science Applications to build, manage, and modernize the systems that keep the country running. This explains why the company already carries roughly $23 billion in pledged business in their growing backlog. This provides exceptional revenue and growth visibility well into the future. The financials also tell a compelling story. Not just 25% earnings growth over the past year, but 80% compounded growth as we look back the last 3 years. The company has also paid a growing dividend for 10 consecutive years without a single cut. That is rare stability in a sector known for volatility because of the lopsided flow of new contracts. The company also recently raised its full-year earnings outlook while maintaining revenue guidance. This means they are enjoying improved profit margins as the business shifts towards higher value mission and engineering work. Wall Street analysts recommend Science Applications as a consensus buy. While only a handful of analysts are covering the stock, it notably has no sells or strong sell recommendations, and the majority of fair value price targets point to attractive upside from current levels. The Zen Ratings applies a hearty B rating to the Science Applications. Once again, this is more like a B+, as it ranks in the top 6% of all stocks we track, while the threshold for the A rating is top 5%, just a smidge outside, but still very attractive. So please remember, these ratings are updated daily, so you can visit WallStreetZen.com to see the latest and greatest data for free on our quote pages. Okay, the component grades for the company reveal yet more to like. The top 16% showing for financial strength, and the top 6% of companies for safety, but the true standout here is the top 1% showing for value. In fact, it currently has the 7th most attractive valuation profile out of the 4,600 stocks we track in our database. The risk with the company is that they are almost entirely dependent on U.S. government spending. This means that any serious budget cuts would likely harm the firm. Well, let's be honest with ourselves. Since when has the government actually spent less money? Yeah, not much of a risk. All in all, this is the most surefire stock in the video today, enjoying a catalyst coming from quantum computing. And with a $23 billion backlog, they're clearly a vendor of choice for the government. You're not betting on a science project here. You're betting on a company that gets paid to make it all work. That's a very different kind of quantum play. And right now, it appears you can buy it at what looks like a great value. That growth and value combination is hard to ignore. Now I want to hear from you. Are you on board with the quantum computing trend? And are you chasing the pure play stocks or prefer the ones with more solid fundamentals like I shared today? I genuinely want to hear what you have to say, so please jot it down in the comments section below. And if you like this video, then be sure to check out my companion video breaking down the government's $2 billion quantum investment.